And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, prop firm trading, and making money doing all of the above. So let's go ahead and get into the risk disclaimer. Since we're going to be talking about real trading scenarios, real trades, and stuff like that, let's go ahead and get into this. The risk disclaimer screen. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I also am a funded prop trader for Audacity Capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that being said, let's go ahead and get into it. Now, some of the things that could happen in a trade. I'd like to get into something I saw yesterday. You could be in a trade and have a headline come out like this one. So please, let's see, where is it? No tariff opinion. So that's from the SCOTUS blog. The Supreme Court of the United States blog from the View of the Court, Mark Walsh. Don't know who he is. But they shifted the non-argument day it holds for most sessions, blah, blah, blah. But at any rate, the SCOTUS ruled that it is not going to rule on the SCOTUS, on the tariff opinion, the tariff lawsuit that's going on right now. So small businesses are suing the United States over the tariff thing, the Trump administration particularly. I don't know how to do that. I wish I could sue administrations. That'd be cool. But at any rate, here's the deal. That kind of pushed this higher unexpectedly. It also pulled it back unexpectedly at some point too. But it kind of one headline just kind of pushed everything. And if I had not been in that direction anyway, would have kind of wrecked the trading day. So that is what all this risk disclaimer is all about. Is that you can have a headline come out that'll wreck your trade, and then you just get to keep going with it. So that's mainly what that's about. Also, the high risk of leverage. This is not a buy and hold type of scenario. You don't come in here and throw money in Forex and then buy a position and then come back and check on it a month later and see what happens. It's probably going to be gone. But anyway, let's look at the DXY, the dollar index. This is where we get an idea of where the dollar is headed. It's a compilation of 6 different currencies: the U.S., the euro, the Japanese yen, the Great British Pound, I think the UCAD, and the Swedish krona. I think I'd have to look back up again because I don't have that committed to memory. But at any rate, that's what it looks like. So we have it pushing up yesterday, which is kind of interesting. And while going into NFPs, and that's the other thing I wanted to pull up is NFPs. I did not get a good idea of what was going on with that yesterday. So with that, we're going to come back here. That's from when I was looking next week. Just refresh the screen real quick. And surprise, nothing's happening today because markets are closed. So we had 50,000 jobs. We're looking for 66,000, so that's to the downside. Unemployment rate went down because some of the people looking for jobs found them, I guess. And building permits went up a little bit, yay, and housing starts went down. And consumer sentiment went up half a percentage point, half a point, or whatever that is. But anyway, and then we had some Fed speak coming out later. So the Fed speak kind of, in my opinion, is probably what put the kibosh on the dollar yesterday. That's probably what this is all about. It was stretching up further, hit 26, and some Fed speak came out and pulled it back down from Kashkari. He's very interested in probably going to a rate cutting type scenario instead of a rate hiking scenario instead of he's starting to talk more less dovish and more, what's the other one? Hawkish. So we'll find out about that. Okay, let's see. Euro versus the dollar caused this to come down a little bit, but still not enough to really trigger a trade of any kind that I would be interested in. It's 10 pips, well, 20 pips down from yesterday is where it closed. Here's the big one. We still do not have a daily print or a weekly print over 158. So let's go back and look back at this weekly chart, see what it looks like. Oh no, never mind, we don't have to. Okay. Boom, boom, and still not breaking through. It's still an ascending triangle, so it's still going to break over 158, just not going to happen right now. So we're looking for 158 on that or more, but we're just not going to see it right now. Here, this is starting to form a very neat little channel right here. So it's going to break channel to the downside, maybe a pitchfork. Boom, boom, boom. See if we can throw a pitchfork in there and see what happens. That's not a pitchfork. Where are my pitchforks? They are right here to go. Boom, boom, and boom. Look at that. That's darn pretty how that works out. So hit the swing lows. Pull that one back over here. No, it's still not going to work. Okay. So let's go up here. Boom, boom, boom. That's not going to work either. Oh well, I like the other one better. But at any rate, that's what that looks like. So we could have, I don't know, weekly. I'll do this later on tomorrow. I don't have much time today. I've got to go back to the day job today. So pound versus dollar looks like it's breaking that channel to the downside. We'll see if it's going to start a new one or possibly boom, boom. And then we'll see where the bottom is on this one. Hasn't quite hit a bottom. It's about to cross the 50-day moving average, or pardon me, the 200-day moving average. And the 50-day moving average just can't seem to make it up there, so it may be a good time to start shorting the pound versus the dollar. Could not get one. Did not get a close over 212. So again, we've got the same conundrum here that we had with the dollar versus the yen. Tried to break out, but didn't. It was also a Japanese trading holiday yesterday, so that also didn't help things. Didn't help us get above 158. The pound versus the 184 here, 212 on the Great British Pound versus the dollar, versus the yen. So very little yen movement yesterday. I imagine now that the news has settled down in Japan, I imagine if they're going to get more rate hiking-ish, because the Japanese bonds are taking off. Japanese bond yields are taking off. Oh, here's the trade right here. This would have been the trade yesterday. As a matter of fact, this would have been the trade wave down here. And what is that? That is December 2025. Okay, so that's the Christmas low right here. And then it's taken off again. Not sure if it's going to continue taking off, but it looks like it's doing a pretty good job right now. So that's the trade I've been missing, is the UCAD. I typically don't like the UCAD because it is jumpy, but it is a lower liquidity pair. But I should probably take more of a look at that, because that's pretty. 136. That's a $300 move right there, or 300 pip move right there, which would be a thousands of dollar move. Let's see. CAD versus the yen again. Did not get the breakout they're looking for. Also, the Canadian dollar must be weakening a lot, because it's not really a whole lot going on there. Let's look at the bonds up here. Look at that. I updated the bond yields, and now we've got the Canadian bond yields. Canadian bond yields here, U.S. bond yields here. Yeah, that would have been a great day to trade that, because it's the differential of the bond yields on that particular trading day. Usually means stronger U.S. dollar, weaker Canadian dollar from a Forex perspective. From a funding perspective, it means a weaker U.S. dollar and a stronger Canadian dollar, because it's got more money flowing into the government. That's if you're on the government side of things. We're on the capitalist side of things, so we like higher interest rates. And that gives us a better idea of what the stronger currency is. Oil. Let's look at oil. Look at that jump. It's almost a gap right there. That's a pretty interesting move. oil made yesterday, so we've got oil coming up, even though all the critics are saying that since the United States is taking over the Venezuelan oil fields, that's going to flood the markets with oil, but I don't know that's going to happen. It's not in the interests of the oil producers, the oil companies to do that. They want to kind of make sure prices don't soar. Although they are sitting on a bunch of oil, I would want it to too, but that's okay. Aussie versus dollar. It's right there. So kind of going somewhere. Down. It hasn't quite closed below the 2026 or 2026 open, 2025 closed, depending on how you look at it. Here we have gold. Gold's perking up again. Got a print over weekly print over 45.09. Could be a chance for it to start running again. Platinum. Not as exciting. Not as exciting in platinum. Kind of cooling off a little bit. Silver. Don't know what to make of this. I would love to see it go higher from an investment perspective, because you know me, I do like my silver. Here's some right here. This is a 2020S emergency production release, mint state 70. As close as you can get to perfect without it being proof. I do have some proof ones around here too. We won't talk about those. But this is another place where I'd like to see silver take off again. Got its close above that, a weekly close above almost to 80. So if we can get a daily print over 80, this might take off again. So it might be good to come in around, I don't want to say 82 on this, because remember, you're dealing with wider spreads, so it's not going to be as convenient to play with, because it's less liquid than gold is, less liquid of a market than gold is. But that's all I've got for today. I will be off on Tuesday. I'll be in the office trading Tuesday. And what else? I'll do that on my own time. But that's all I got for today. I've got to go to my day job. If you go to the, let's see, if you like this video, then by all means hit the thumbs up. If you want to hear more, see more of these videos, then subscribe to the channel, and YouTube will let you know when I put out more of these videos. And lastly, if you want to comment, if you want to talk to me, then by all means comment on one of the videos, and I will get back with you as soon as I can. In the meantime, you guys have a great one. Talk to you later. Bye.